Naira's been under some pressure recently. What's the story around that? Because we did see the Naira strengthening closer to 160 not too long ago.
Yeah, morning, Wole, and thanks for having me this morning. We've seen pressure back to Naira for some time now. At the end of trading yesterday, it closed at 162.1525, and that was on the back of the fact that the supply that we've seen that actually strengthened the currency over the past week or 1 or 2 weeks actually slowed down. And as we've seen, the demands actually, corporate demands and likes come back to secondary market. So to some extent, we've seen that affect the level that the currency is trading right now. It touched the high of 162.30.40 during the course of trading in the week, having come from the low of 160.60.70 at the beginning of this week.
Yeah, I think some people that look at the CBN's auction of FX last Wednesday may be a bit confused at what we're seeing, because the central bank clearly has reduced how much it's selling. Sold $180 million at the last auction. What exactly is happening? Because one would think that if they're selling less, then demand has dropped, or at least there's more supply in the market.
Yeah, I agree completely. Prior to the time that CBN actually dropped their offer to the cycle of 200 million, you notice that for some time they've been offering between 250 to 300 million. And that was on the back of some demand coming through from the offshore guys who are trying to offload their positions in the TB and fixed income market. Thereafter, we've seen that slow down, and we've seen some corporate sales in the secondary market from offshore, both offshore and even oil company majors, and that actually improved the level that the NGN is trading secondary market, and we've seen that appreciation over a period of time. But thereafter, we've seen that slow down, like I said earlier, and as demand is coming back to secondary market, we've seen that uptick in the price.
What can you tell us about the offshore interest and to the extent that it's contributing to the supply of dollars in the market?
Well, prior to now, we've seen a lot of offshore players taking positions in frontier and emerging market, and Nigeria has not been an exception. We've seen them take positions on the fixed income and TB market when the yields were pretty high. And along the line, as the euro crisis actually deepened, we saw quite a number of them actually offloading their positions, and that actually put pressure back on the market. So you can discount how much these contributions have been to the support of the Naira over time.
What about the equities market? And we've seen the equity market, like I mentioned, now move close to its year high. To what extent do you think we're seeing more foreign interest and perhaps the supply of dollars to the market?
For now, I think I would say that the supply coming from the offshore guys have actually slowed down, and though we're still seeing a bit of interest coming to nibble at the opportunities in both equities and fixed income, but generally, compared to what we had at the first quarter of this year, is significantly low.
All right, let's switch over to the bond market. We know next week the DMO is going to be auctioning Nigerian bonds. 5-year to 10-year is what's on offer, and it's going to be a reoffer of existing bonds. And clearly there's been a change here. The dynamic was that they were used to offer 3 to 5-year bonds. Now they are doing 5 to 10-year bonds. What are your expectations for that auction next week?
Well, I think the latest introduction was just the introduction of another 7-year bond, which was open last auction at 16%. The consultation has now been from switching from the short data to the belly of the curve to the long end. So we've seen more issuance on the 5 years, the 7 years, and 10 years. And at this auction coming next week, we're seeing 25 billion apiece in the 5, 7, and the 10-year bond that will be on offer. The last one, we saw the rate print within slightly above 16% in those maturities. This time around, I don't think there's going to be any major difference from what we saw last month. We expect the yield on the 5 years to print probably between 16%, 7 years to be around 16.1, and 10 years to be around 16.15.
All right, give us some context for where yields are now, because I spoke to the Minister of Finance yesterday, and she already indicated that the government already is thinking that the yields that they are issuing bonds at right now are quite high, at close to 16%, like you just mentioned. But in historical terms, where are we with bonds at 16% right now?
Well, I don't think we're far away from the record high we've seen on fixed income over time. If I could count back, I think we've seen a yield of about 18% in 2011. That's October 2011. But that was on the back of a lot of increase in NPR that happened at the MPC meeting that time. We saw over 350 basis point hike in NPR over a period of about 3 months. So, and at that time, the interest on the fixed income actually slowed down. And if you look back again, I think the last time we saw this kind of yield was in 2005.
So does this suggest for you that we are at the top of the yield levels, if you like? Do you think that yields can only go down from where we are?
Well, everything actually going to depends on supply coming from, or issuance coming from the government. If the borrowing on fixed income actually increase, the possibility is there that we're going to see the yield over around this particular level. But if the supply in terms of borrowing is actually reduced, the possibility is there that we're going to see a dip in interest rates.
All right, let's go a bit shorter around the curve now. The Treasury bill market, what is going on there? I know that there were auctions this week.
Yeah, there was auction on Wednesday for 91 days and 182 days. 1 year was exempted. The 1 year will take place on the 26th. And we saw 91 days drop on average about 30 points from the previous level, printed at 13.75 from 14.09 that it printed at last auction. And the 182 day actually dropped to equally to by about 40 basis points from 15.3 to 14.88. Well, we've seen quite a number of interest coming from PFAs and banks on TBs, although the interest coming from the offshore guys have slowed down over a period of time. But by and large, we've seen interest being stepped up from the local investors.